Hey Goku, you know why I like having you as my neighbor? 1, there's security, and 2, you give the best advice. On that note, I need some advice. I'm out with my lady, we're at the neighborhood party. So we're there, we're dancing, we're having fun. And then next thing you know, it just starts raining. Or at least that's what we thought. It was this random drunk guy. He's spinning his shirt around, it's all full of sweat, and it's hitting everybody. Everyone's looking at him like they just want to hit him. And I'm one of those guys. I thought about, what would Goku do? Okay, what would Naruto do? Vegeta, Sasuke, Luffy. So everybody would have put him on his back. Okay, I'll remember that. Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we're gonna talk about the theme of the week. Now, this week we had a theme of penny stocks. Now, what do I mean by penny stocks? The way you define penny stocks depends on the source. Now, most stock prices of under $10 qualify as a penny stock. Now, the real penny stock that most people think about are actually worth pennies, but that's actually something available on the OTC market. When it comes to those lower markets, there's less rules, but you can still make money. It might just be a little more dangerous. Now, in a higher neighborhood, like a higher market, like NASDAQ, you see things that are usually above $1. That's because it's the NASDAQ threshold. Now, there's similar thresholds in other exchanges, but for the NASDAQ, that's what I focus on personally. Now, when it comes to stocks, it always forms around your edge. What stocks do you trade? Specific sectors, specific price ranges, certain amounts of volume. It all comes down to your personal edge in the market. In my case, I don't like stocks that are too expensive. I stick to penny stocks. Now, on the other side of that, I don't want stocks that are too cheap because they have too much liquidity, too much volume, and that leads to chaos. I like to filter those stocks, especially stocks under $2. That's where the real penny stocks are. Now, all the ticker symbols that traded this week, they have traded in the past with massive parabolics, and it has spikeability, meaning a history of spiking. When people see that recent price action in their history, they realize this can run again and at any moment. What's really important is the catalyst. What makes the person trade this stock is that they believe other people will flock to this stock, either now or later. This week was a great example of what happens when there's too much volume. We have OPGN, SCCL, and the main play, TPST. Now, TPST is Tempus Therapeutics. Now, Tempus Therapeutics deals with oncology. Oncology is cancer, and cancer is a very viral topic everywhere, especially in penny stocks. Now, the holidays are fast approaching. It's right before Halloween, and a lot of people are sensitive to certain words. Cancer is one of those words. People are reminded of certain illnesses during the winter. And at this point in time, a lot of people want to throw their money at things during the holidays. And TPST is what people chose this week. Now, TPST, this started at 20 cents per share. And by the end of the day, it went to $11 per share. That's almost a 5,000% increase. Now, these kind of moves are not normal. If anything, it's considered a black swan, meaning that it happens once a year. Now, normally you also could call it a supernova, but a supernova, it's a little different. Now, when it comes to TPST, it's not the only thing that ran this week. It also had sympathy plays. One of the sympathy plays is OPGN, also known as OPGN. The last one is SCCL, known as SOCO Holdings. SCCO is not in the same sector like OPGN and TPST, but the price action is really similar. It went parabolic from 20 cents. So this answers the question, can you have a sympathy play that's not in the same sector? Yes, because it has similar price actions. It has a similar accumulation. It has a similar starting point to the original play. Now, at this point, we know that parabolics are very dangerous, but they do hold opportunity for those that use a small amount of risk. So when we look at what happened on the main play, the catalyst was the positive test results were teased for its cancer research. On the sympathy plays, there was no actual catalyst form other than its associations with TPST. When we look at TPST, we understand that these black swans, they're not made organically. A lot of them, they're made cheap as well as easy to borrow to attract short sellers. And then once that squeeze happens, that's where the real black swan comes out. Now, when it comes to the momentum trading inside of a black swan, you usually want to avoid it the first day until the momentum is cracked clearly. What is tradable is the sympathy plays that pop up. You can extend that profit margin if they trade in the same direction, especially when they have massive amounts of volume. We're talking about minimum 50 million volume. So when we look for sympathy plays, we have to simplify our thinking. Sometimes you just have to look for things in the same sector. When oncology starts running, you look for it on oncology play. You probably short or long the entire sector at a time. In other cases, there could be different connections. It could just be the price action itself. When it comes to the sympathy plays, they are the safer bet, mostly because it's a balloon. It's only full of momentum. There's no actual meat to the move. There's no specific news. It's just related to the main play. But when the main play dies, the sympathy play will die even faster. Now, as a general rule of thumb, when you do momentum trading, the higher you climb, the harder you fall. And that goes double for the sympathy play. So the money's coming into the market during the holidays, and a lot of people are starting to pick up in penny stocks. The theme of this week is true penny stocks. Is that going to continue into next week? We don't know. But what we do know is that the market is back. As always, lead with risk management and things will turn out fine for you. Because if you don't, you might be chopped up by a black swan. When we talk about excellent risk management, you have to understand there is risk management at the account level. And then there's a risk management at the broker level. You don't need to have both, but it may help, especially in cases of black swans. These massive short squeezes, they should be treated with caution, but have the courage and wisdom to identify and ride the trend. Now at this point, that evolution is actually a transition into the holidays and holiday volume. And with that amount of volume, the price action, the manipulation, and everything goes crazy because more money's in the market, which means there's gonna be more mayhem in the market, more madness. But all right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.